What's going on, everyone? We're going to have a conversation today. You have $500,000 and you want to retire. Now, I'm not going to give a general range of what age you're going to be, but let's say you inherit $500,000 and you want to retire now.
How much money do you need to retire? A lot. You need a lot of money to retire, and it depends on what kind of life you live and when you want to retire.
I'd probably say around at least $1 million.
I would say you need about $1 million.
Oh, I would need probably 2 million.
And you want to not run out of money and be successful at it. And you need about $50,000 a year. Is it possible? Yes, it's very possible.
$400 million himself believes something shocking. You could quit working forever with just $500,000 saved. In this video,
But it's very risky. So before you go into this video, think that it's going to have a high success chance, I'm going to tell you it's a highly risky investment strategy and I don't recommend it. But hey, I'm going to tell you it anyway so you understand that it is possible with dividend stock. Now, here's the thing I got to tell you. You can also buy 2 houses, pay them off in full, and have a $500,000 rental portfolio, long-term rental, and rent each house for $2,500 a month and give you 60 grand a year. Yes, that is possible, and that is one way you can get 5 grand a month, and it's a little less risky. But let's get into this video today talking about dividend stock. If you don't know what a dividend stock is, I'm going to put a video about dividend stock, what it is.
What if I told you a company could pay you for just holding stocks? Yes, it's not a scam. It's called dividends. What are dividends? Think of it like rent. But instead of owning a house, you own a piece of a business. How do they work? Let's say a company pays you 4% of dividends. You own 1,000. A year later, you make $40 extra without doing anything, just for holding it.
Now that we know what a dividend stock is, this style of investment is considered high yield investment for dividend stock. Now, some people do this for the income, and let's say you don't want to work. It doesn't matter what age you are right now. Let's say you have $500,000 from inheritance. Now, you want to get about 5 grand a month of passive income. Now, there's only 2 real ways I believe that there's passive income. And here's a video of someone talking about what a passive income is.
That passive income exists. I think the reason so many scum buckets are making so much money is because you're buying stupid courses over and over, thinking there's some magic formula for passive income. Passive income looks like this. You take money that you can afford to go to zero and you put them in the 2 places that have historically created passive income. Public markets that you don't care if it goes up and down and you just wait to the end, or real estate. And you
That we know what passive income is and I really believe the 2 things that are passive income is. Let's talk about what this strategy involves. Now, this income can vary based on the market condition. So its risk tolerance and investment strategy is a very big issue with this strategy. Now, the amount of income generated depends on what the average dividend yield of your portfolio. And in this video, I'm going to talk about a very high yield dividend that has a great return. Well, okay return that you could use this style of investment. And it took me a while to find this stock, but hey, we're going to try this stock out and see what's going on. Now, the amount of income generated directly on this average dividend yield of your portfolio. So let's give you an example. A low yield example of S&P average currently about 1.2% at 500,000 will give you about $6,000 a year. Well, that's not enough for you to live off of. But let's say you get 500,000 and you get 8% yield. Well, that gives you 40,000. So there is a number that you can get a good return. So let's talk about the key factor to consider before we go into this dividend stock, and I'll show you the numbers. Now, The key factor to consider before you're investing in this is the yield versus risk.
Dividend yield, or simply yield, shows you what percentage of the stock price you pay today you will get in the form of dividends every year. If the stock costs $100 and it offers a 2% dividend yield, you will get 2% of the $100 you pay today, so $2 every year in dividend.
Higher yield investment often comes with higher risk potential and volatility. So chasing an absolute high yield risk is really risky. So, and the ability to maintain these payments might not be guaranteed. So this is what you need to understand. And number two, this isn't a diverse portfolio with multiple ETF. It's going to have one ETF in it, and I'm going to show you two of them so that we can see it in the future. Now, diversification of this is a really mitigated risk if you want to lower this risk tolerance. And you just have to invest across various stocks like utilities, consumers, staples, and finance. These are different asset class. Now, let's talk about the growth and inflation. While dividend stock can provide income, usually it has issues with growth, especially with the high dividend yield. So this is what you are giving up. And let's get into this stock so that we can get over, since we know the risk and the tolerance, and that you could also do this route with real estate. So let's get into this. And what stock are we gonna say we invest 500,000? Now, it's no surprise I'm gonna pick a ETF. ETF I found, and it took me a while to find it, was JEPQ, or JP Morgan Nasdaq Equity Premium Income. And they have an expense ratio of 0.35%, and they actually have a 14% growth over the maximum of this lifestyle. Or 5 years, it has 14% growth, and 3 years, it has 27%. Now, 1 year, it doesn't look that good, but it's at 0.58%, so you're not losing that much value. But you are losing value in the 1 year term, but overall, this stock is growing. Now, what we also need to know is what holding it has in this portfolio. Now, right now, it has the NASDAQ 100 index, NVIDIA, Apple, Microsoft, Google, Broadcom, Amazon, Tesla, and Meta. Now, it has Netflix in there, and it has some good holdings. So it does have good stocks. Now, stocks are down right now, so I'm not worried about it, but it has some decent stocks in the portfolio. But if you notice, it's not very diverse in this portion. It's almost all in tech companies. But hey, we are looking for income. So if we're looking for income, we are looking at a 10% dividend yield. So that's 10.67%. So it's a really good dividend to buy, especially since it's an ETF and you only have to buy one. And it pays monthly dividend. And this is the thing that makes it easier for everyone. It pays monthly. So let's go into the math. I'm going to just pull the data into this calculator right here. As you see, it's JEPQ with the initial investment of 500,000. Now it pays a monthly dividend growth at 7.08. And we're going to change this into 1 year so we can see the numbers and what we get. So in 1 year, we'll get $53,000 in dividend paying. So guess what? That gives you about 50 grand a year, and you can live off of that. And this portfolio is still growing. Go to a 10-year. I put in the numbers. 10-year, it does pay monthly. And year one, with no drip, the amount is going to be $564,000. So it does increase, and you get a $53,000 dividend payout that year. And the following year, with no drip, it still says an increase, and it's paying a dividend paying of $116,000. Now, here's the thing. That's the total dividend payout. So in 2 years, you get paid $116,000. But the annual dividend will be $63,000 on the second year. So yes, this portfolio will also grow with you. But remember, this is a highly risky style. Now, in year 10, and the reason why I'm doing 10 years is because let's say you want to retire now and you're 40 and you want to see what your 10-year aspect look like. Well, in 10 years, your annual dividend payout would be $290,000, and the total dividend payout since the conception of this portfolio is $1.3 million, and your ending balance will be, let's see, $2.19 million. Now, I have to see with no drip in 10 years, it's $1.36 million with a dividend payout of 1.3. So it does pay a decent dividend yield. So that's the numbers on this stock. Yes. No drip, no drip. So if we want to look at a better number, I took away the ending value so that we can see with no drip. So year 10, the total payout will be 1.3 million, and it'll give you about 1.3 million in investment. So, and it's paying you about $290,000. And here's a snapshot of it. $290,000 a year with a total payout or investment at 1.3 million. That one is for JEPQ. Now, do I think this is really gonna happen and it's always gonna pay this route? No, it's a highly risky portfolio, right? So the risk on this one's very high. But someone asked me if you could do it. And yes, this could do it, and it could possibly end up going well for you if it continues with the numbers that I pulled or that pulled from the stock. So this is just data. So most likely this will happen, but who knows? It's a highly risky strategy. Now, the next stock we're going to get into is SDIV. The reason why it's another monthly paying dividend stock. It's up 10% this year. It's been down for the recent few years. The reason why I'm looking at this is because now it looks like it's starting to recover. It pays a 9.75% dividend yield with a expense ratio of 0.58%. And it holds decent stocks, but this is more of international or global dividends or global stocks. So each your own, understand this is a portfolio. Now, do I think this stock will do very well? I don't know. But right now, last year it grew 10%, so I threw it in just in case. Doesn't mean that you shouldn't do it. No. But if we do the investment on this calculator, 1, 2, 3, you have an estimated return of $47,000 the next year. And it's all right here. I put it in, how much investment will grow over time. 1 year, it says 47,000. 2 year or 3 years, it says 169,000. And 5 years, it says it's going to be 541. And this is because the data that is pulling right here. So you got to understand that this is just data and we're just doing our best to give you the best estimate. Now let's go ahead and plug in the number right here, SDIV. We're going to load the data and put 500,000. 2, 3. And we're going to see how much it's going to grow in 1 year. Because let's be honest, let's see what it does in 1 year. So in 1 year, your annual dividend payment will be $50,000 a year, with your ending balance at going down 497,000. So it's going backwards. But hey, this is the risk we are taking if you want it. And we're going to do 10 years so we can calculate it. We did 10 years now. And if we do not do drip investing, so let's remove ending balance and no drip, what will happen to it in 10 years? The balance will be about $537,000. So you still have your initial value a little bit higher. And it says it's going to be paying you about $50,000 a year. Now, that's just how the numbers look. So by the 10th year, it had paid you $636,000 in dividend payment. So you do the math, it pays you about $50,000, a little more than $50,000. So 10 years. So 500,000 in 10 years is 50,000. So it pays you about $60,000 a year. And this is just how the math works. And I didn't make up the numbers. I pulled the numbers from online. And it pulled it. And it says 10 years you have 537,000. And it had paid you a total of 636 in dividend in 10 years. So yes, it is very possible for you to live off a high yield dividend. Now, like and subscribe to my video. That is all I got for you. But let me tell you this again, this is a very risky investment, but doesn't mean it's not possible to live off a high dividend with just $50,000 or $500,000. Like and subscribe to my video, and that's all I got for you.